All right, Chinese capital markets, why is it important? Why do we care? So, this article, China is going to unleash 28 trillion of their capital markets to challenge U.S. and AI. So, pretty misleading headline. A few things to dive in here. Let's get into it. A few things here. First is the difference between Chinese A stocks versus Chinese H stocks. So, Chinese A stocks are those primarily traded on mainland China versus Chinese H stocks are those that list primarily on the Hong Kong market. Now, of the last, I don't know, call it 5 to 10 years, the most value creation has been driven on the Chinese H market. So when we're talking about retail, and this is what this article is talking about, it's talking about Chinese everyday investors. You, me, every Joe Schmo, and Jane out there that's investing in Chinese domestic stock markets, not on the NASDAQ, not on the NYSE. This is what they're talking about, this 28 trillion. Now for Hong Kong, Chinese H, the majority of, and this is the misleading part, the majority of trading that happens for those type of stocks, again, where the most value creation has happened, has been from institutional buyers, not retail. Where retail trading happens most on the market is Chinese H stocks. So again, not the most innovative, not the biggest value creators like that happens and list on the Chinese H. So yes, retail tends to be higher on mainland stocks, but those mainland stocks tend to be less impactful for national priorities, whether it's AI or technology and catching up to the US. Like we're talking about here. Certainly, yes, you can have a higher number of retail participation just by people. That's all fine and well and good. But this is not, and nor has it ever been, the largest way where Chinese households, aka retail investors, put their money and park their money to grow wealth over a long period of time. It has always been, and yes, this is out of date, it's 2019, obviously fast forward this and we get back into this into 2026, but it has mostly always been household ownership. There's no such thing as private property or private, house ownership in mainland China. And so yes, stocks and equity comprise, not a non-zero amount, great, but it's certainly not the largest, with housing being the biggest category. Same with deposits. A lot of this is cultural as well. So, look, you can see a lot of headlines have also said cultures like South Korea, which is obviously a capitalistic society, democracy, etc. They have very robust, actually, capital markets. And again, very high retail participation in their stocks and equities. So you might imagine this number is, much more higher, incredibly higher than what you see in China. So some of this is cultural. What's just been passed down through the generations. But then two, it's how, the actual money-making value creation machine of domestic stock markets, domestic equity markets. The intimation of this article, I would actually upgrade that intimation from an insinuation. What it insinuates is that Chinese domestic stock market is inherently or fundamentally more valuable than U.S. or Western-based, and I would include South Korea and Western-based stock markets, which is just fundamentally not true. It's just outright flat. I think a biggest example would be SK Hynix. So, value creation long-term, yes, we see that in U.S. stock markets, see that in Asian markets, ex-China. I can subscribe for more.